Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, June 21st, 2011 is brought to you by Realtic. All right, guys, we have a lot to discuss today. First off, the market is in rally mode today on anticipation of a vote of confidence for the Greek government, possible new austerity measures, and ultimately all of that leads to a new aid package that could be upwards of $100 billion. So again, we will watch this very, very closely in the coming day or 24 hours, as we should know by tonight, basically around midnight Eastern time, what is going on with Greece. In addition, tomorrow the Federal Reserve will release their FOMC policy statement, and a lot of people are kind of anticipating possibly some sort of new round of QE3. I think the market's kind of getting a little excited about that. They think the market may do a little bit of dovishness. Now, I don't think it's going to be QE3, but I do think they're going to, as they said before, reinvest all of the money from QE2, which essentially could be viewed as a QE 2.5. So just keep that in mind. This is all adding to weakness in the dollar, which is sending the market rallying higher. The market's having a nice solid gap up and a surge to the upside. Now, you guys know yesterday in the video, I called this beautifully. If you watched the Research Center last night or were in the No Hype Live, I went through this beautifully, folks. You want to know what it is? Take a look at this. There was a beautiful inverse head and shoulder pattern on the intraday chart. And I said if you get above 128, this market is going to go directly north. All right, all the way up to about 129.50 to 130. That will be the target. Sure enough, it played out perfectly. This was called in yesterday's free video. I discussed it in last night's private video for the Research Center subscribers. We went over it last night in a live broadcast to the Research Center members in the No Hype Live, and I'm just going to show you exactly what we're talking about. Here's your shoulder, here's your head, and here's your shoulder. All right, yesterday we came up to that line we couldn't get through. This was your neckline. Take a look at this neckline, guys. There's your neckline right there. If you got through the 128 level, it was in play. As long as you weren't into that 128 level, it wasn't in play. Sure enough, look at the consolidation here, and then today's gap up, that means it's in play. That means this market was going to go to 129.50 as a minimum, and that's exactly where it goes. This is a classic pattern you must know. Inverse head and shoulder patterns are bullish. Head and shoulder patterns are bearish. Understand how your neckline is, your signal for a breakout in this situation. The gap up today was a beautiful river theory as well for those of you that followed the methodology in the money stocks. That was another bias that gave us an idea this thing was going to go straight up. And the markets, again, rallying substantially. This was an amazing run higher on a beautiful river theory straight up until we hit the master resistance level. Where does that master resistance level come from? Look at this, guys. Take your pivot top from June 9th. Connect it to your pivot top on June 14th. Draw it right through, and you get the exact pivot high from today, and that was your target. All right, and again, it's a thing of beauty. You ultimately went and filled the gap here as well. There was a gap that we just filled and pushed through, tagging that level. And since then, the markets have come in just a little bit. It's still a tremendous rally day. Dow is up 92 points, NASDAQ up 47, S&P 500 up 14.5, basically 1.25% across the board. Dow's up a little less. NASDAQ's actually up 1.75. NASDAQ's having a huge day. And by the way, folks, we nailed it in the Research Center. Multiple trades we're taking profits on today that we had put out as long opportunities. I called the bull mode today in yesterday's video. We got plays based off of that. Let's take a look at some of them. The Qs was one, which is the NASDAQ 100. This is a thing of beauty, guys. The Qs are soaring today, almost 2% higher. Many amateurs would have said, oh, this is scary. It's below the 200 moving average. Wrong. Take your pivot low right here. That's used to get the amateurs out of the trade. Right there was your buy. I bought myself at 53.85. I gave it into the Research Center with a trigger price at 53.85. It triggered the very next day. I put it out the day before. It triggered the next day. We were in this trade, and look at this thing to the upside. We sold today. The whole position was finally unloaded at 55.10. 55.10, folks, from 53.85. In 2 days. 2 trading days. We bought in the end of Friday. It triggered at the end of Friday. And today and yesterday, 1-2, Monday, Tuesday, out, done. And a huge $1.25 gain right there just in 2 days on the Qs, which is essentially the NASDAQ. That's a very, very big trade right there, and it's beautiful because you were never in panic mode. We knew we had the support level right here. The amateurs got flushed out right here, which is always what you want to see when the amateurs go and take the price at the 200. As it comes down, you buy right there, and of course it bounces back. It's just the nature of the beast, guys. You got to know what's going on here. All right, other trades out there. General Electric. I unloaded half my position in General Electric today. Again, my entry was $18.18 with the dividend factored in, and sure enough, it hit a high of $18.94 today. I'm still holding half my position, guys, because I do want to stay somewhat in this market a little bit. Now, I've unloaded all my Qs, half my GE, half my Morgan Stanley for a profit already. And again, we're banking this money, but I do want to stay in half the GE and half the Morgan Stanley, just in case we see a little bit. Now, remember, the key is to understand how to handle this. Because we've taken half the profits off of GE and Morgan Stanley, it means it's automatically a break-even stop, which means on the second half, worst case, it's a flat-out trade. Worst case. That's if the markets break lower and things just get ugly, then you just take a flat out and you move on. So you put yourself using discipline, using the methodology here at In the Money Stocks to constantly be taking profits on the swing trades and then moving your stops to break even so you can't get hurt on the downside. And this is the discipline that continues to make sure that our members here at In the Money Stocks make money day in, day out. If you want to try us out, there's a 7-day free trial. Join the Research Center. Join the chat room. Take the 7-day free trial. No obligation. You can literally sign up for the free trial. If you don't like it, if you somehow mind-bogglingly you don't make money, which is crazy to think, but if you don't for some strange reason, then just cancel it. Now, obviously, you will make money in it because that's the way we do it and that's the way we roll here at In the Money Stocks, but nonetheless, come find out for yourself. I guess that's my point. If you don't like it, cancel it. No big deal. You don't pay. Simple. Do it just before your 7 days are done. All right, let's go back to some other charts here. The spiders on an intraday basis. You can see, again, nice little pullback off that level. You've come in just a little bit. If we zoom in a little bit, look at how many green candles we had. In the first, really, till 12 o'clock today, you only had 2 red candles. Amazing amount of green candles up. Went right to that trigger price. All right? You could have shorted either here or here. Anywhere up in this range was a good short, to be honest. You had gap fill and you had this pivot high. Either way, you're in the money right now if you did short from up in that range and you're enjoying a nice little short. So you can short the market even when it's having a big day, although as I caution to the chat room guys, if you're going to short, you'd look for small gains in an upward market. If you're going long, you look for bigger gains. All right, it's just the way it works. All right, but again, obviously the market was overdone to the upside there, needed to come in. This is actually a little bit of an in-spirit of bullish pattern. We'll see if there's a short squeeze later today, or maybe some profit taking ahead of the vote tonight in Greece, and obviously the Federal Reserve press conference tomorrow afternoon. That's going to be a big deal as well, and I think the market, again, is looking for positive comments from Bernanke, possibly more money infusion based on what's going on in Greece. We'll be watchful, very, very watchful of all of this. It's a fun day, guys. It's always good when we're just nailing profits left and right, and again, that's all you can ask for. All right, let's take a couple other looks here at some various stocks. Chinese stocks are having a big day today. I don't know if it's confirmed, but I heard that the Muddy Waters guy, who Muddy Waters puts out a lot of these bearish, fraudulent accounting woes stuff on the China stocks, and he got charged by the Securities Exchange Commission today with manipulating stock prices and using them to benefit him, being short essentially, then putting out a bad PR and then selling into that or covering into that and making millions and millions. I think it was like hundreds of millions of dollars in profits. But in any case, that's actually helping these Chinese stocks because I think the thought process is that people will be a lot less likely to put out one of these negative PRs on a Chinese company if there's possible repercussions like we're seeing now. So if that's a legitimate thing, then these Chinese stocks could be in good shape, and we're seeing a lot of them bounce higher today. For instance, let's take a look at a couple of the smaller ones. One that just popped up that I was talking to the Research Center to the chat room not long ago was Zoom, ZOOM. Look at that pop off the dead lows here, up about 10% right there. Other Chinese stocks, BSPM, I love this one. Nice pop. It's a little bit off the highs, but that's also getting a bit. I mean, there's a dime a dozen here in Chinese land because there's so many going up here. I mean, they're just left and right zooming up because of what's going on here with that possible report of the Muddy Waters guy getting charged. All right, so that's just something to watch because, again, I do think that some of these Chinese stocks, assuming they're legitimate, could be very, very cheap on the side of earnings if their earnings are legitimate. All right, so keep an eye on that. Let's take a look at financials today. Goldman Sachs is trading up about $1. The financials are actually a little bit on the weaker side after that downgrade yesterday. They're still a little on the weak side, but we'll watch and see how that plays out. And we'll follow it, obviously, accordingly. So, in any case, financials, you can see JP Morgan is still up, but only up 27 cents for the market being as high as it is. That's not really a great gain. That's, I would say, the only sector that's lagging just a little bit here. All right, aside from that, the other sectors are having big, big days. And again, all you can ask for is that you're in participating, which, again, we were, folks, on the long side of this market, knowing this rally was going to come. And all it came down to be honest, I mean, people think we have a crystal ball here. I can't tell you how many members have said, I love that you have this crystal ball. It's not really a crystal ball. All it is just common sense and looking at pattern. I mean, I've studied pattern for decades at this point, understanding this market. And you can see the inverse head and shoulders there. You knew if it got above there. In addition, we also had the idea that there's certain type of count systems we use and certain stuff like that that's going to tell us that this market has a high probability of going up. But that inverse head and shoulders was obvious. We talked about it yesterday, and look at it play out today. So again, you bought on the long side, you're making big money today. Another good call was a call on the bullish side on the Pro Trader watch list for Caterpillar. This call was put out at $95 to buy, and it actually hit 102 today. So huge move there on Caterpillar as well. Look at this thing. This is where we put out the alert right around this area down here. And look at Caterpillar now. Truly an amazing mover. All right, enough said, guys. Bottom line is this. Free trial. If it's free, it's for me. Take it at inthemoneystocks.com. Try out the research center for 1 week. No obligation. Cancel if you want before the end. You won't be charged. And again, you take it. We're pretty confident that you'll make enough money in that 1 week to pay for multiple months, if not years, of the research center. Take care, guys.